Alright guys, welcome back to a new video on my channel. Today we're going to be talking about liquidity graph. This is my secondary strategy that I have after supply and demand. You guys know that I trade supply and demand is my main strategy. That's what I use every single day, but sometimes I don't see a supply or demand setup, and then liquidity graph is what I end up taking, one of these setups. And I feel like last week was huge on liquidity graphs. There was a lot of liquidity graph setups last week, and I'm going to go over a couple of them so that you guys can understand how they look and which one are quality liquidity graph setups. And also shout out to SPX from last week, man, because it went amazing with the liquidity graph last week. So with that being said, don't forget to join the Discord so you can get the signals every single day. The Discord link will be in the description, and also don't forget to follow me on Instagram. So with that being said, now let's get started with the video. So on Monday of last week, guys, the 2nd of December, we had this liquidity graph on SPX. As you guys can see, the trend on SPX is bullish. We have been breaking highs and creating higher lows on the way up. Alright, so for a liquidity graph to happen, if you want to go with the trend and the trend is bullish, you want to see a low being taken out with a wick, with something like this wick right here, for example, but taking it below the low and then closing the candle above the previous low right here. Alright, so this is exactly what happened on Monday. Let's go ahead and I'm gonna show you guys right there. So this wick went below the previous low right here, which is this low right here. It went below it, so it grabbed the, let's say, so that you guys can understand the concept behind liquidity graph. The people that bought over here, for example, on this push to the upside, will have the stop loss sitting below the previous low right here, right? Because if you're following market structure, it has to keep creating higher lows and higher highs. So if you bought over here at this low, your stop loss is sitting below this low right there. Let's say it's sitting like right here, a little bit below the previous low right there. So a liquidity graph is essentially a liquidation of those orders to the upside, right? It liquidated the long positions that were open over here with the stop loss right there. It hit the stop loss right there. It grabbed that liquidity, liquidated the traders, and now it reversed and go to the upside after it closes that open positions to the upside, right? So that's simply liquidity graph. And when it is selling position, it's kind of the same thing. If you have your stop loss above it, it would be a liquidity graph above it, like a wick, and then closing back below the previous high, and then reversing and going the other way. So that's basically the whole concept on this strategy. All right. So now we had that wick right here. It closed above it. Where will have been your entry? Again, same as supply and demand. Break of candle will have been your entry. Stop loss goes below that wick, and then you aim for a 1-to-1, and then this was the next candle, almost close to TP, but then it consolidated for a little bit until eventually it reversed, went the other way, and it hit TP. All right, so this was on Monday. So Monday really, it went super good with SPX. That liquidity graph was super good, also going with the trend. All right, now on Tuesday we have gold, which on Tuesday you could have taken two different liquidity graphs. All right, the first one was kind of a counter trend because we had the 200 aiming up, the 50 and the 13, and then you can see that gold created like a high over here. It grabbed the liquidity right there, so the people that sold over here in this consolidation before this push to the downside, the people that sold right there probably had the stop loss above the previous high. It stopped the traders right there with that wick, but ended up closing the candle way below the previous high. So that is a liquidity graph. In order for a liquidity graph to be valid, we cannot close above the previous high or close below the previous low. If we get a candle closure below the previous low, then that is invalid. You need a wick and then a closure above the previous low. Even if it is a closure like right here, but it's still a little bit above the previous low, that's still valid. All right, what you need is not a closure below or above the higher low. All right. So right here, we didn't get that closure. It was just a wick, so stopping those traders that sold over here, and then it closed all the way down here. Your entry will have been right there at the break of the candle, and then stop loss above that red wick, and then you aim for a 1-to-1 which it would have been hit right here. Now, let's say you didn't like this position and you were leaning more into buys for gold on Tuesday. All right, you also had a buying position on liquidity graph, so you guys can see these lows right here equal lows, which, by the way, sometimes when you get on liquidity graph setups, your target may be the next liquidity. For example, if you took this selling position on a liquidity graph, you might be aiming for the next liquidity in the market, which is these lows. We didn't have any market structure over here until these lows right here, which had equal lows. That would have been your next target if you wanted to leave a runner, for example, on this selling position. But going with the buys over here, if you didn't like the sales, you could have also taken these buys. Again, you guys can see the lowest point on this low, on these equal bottoms over here, equal lows over here, this double bottom, the lowest point was right here. So we wicked way below it. We stopped all the buyers right here that bought over here, then had the stop loss right here. All right, we stopped them out, and then it completely reversed and closed back above the previous low. So when we saw that, that is also a valid liquidity graph. You could have taken your entry at the break of that candle, say, and then you put your stop loss all the way down here, and then you put your TP at a 1-to-1. All right, then you will have gotten into the position right there, and this one took a little bit, it consolidated for a little bit, never hit stop loss, and then it went to TP a couple hours later, I would say. So it went from like 10:25 to like 11:45, so like an hour and a half, give it or take. A little bit less than an hour and a half. So right here, this will have been your TP hit, 1-to-1 liquidity graph. Perfect. This was on Tuesday on gold. All right, now let's go to Wednesday. Wednesday was very interesting as well, because you had SPX liquidity graph. All right, SPX, as I said, it went super good on the last week. All right, SPX was super good. So you had these equal lows right here from London session, so double bottom and then reverse to the upside. You had the equal lows, and you also had the 200 EMA right there in confluence with those equal lows at the time that we took that liquidity. Again, we went below these lows over here, closed all the way above it. Your entry will have been at the break of the candle. Stop loss goes below the wick right there. That was the liquidity graph. And then you aim for a 1-to-1. You will have been on the trade right there, and then straight to TP after that. Also, as you guys can see, taking the liquidity on the highs, so that was a nice target to have a TP on. All right, and you're also going with the trend, which is overall bullish. All right, liquidity graph is going to work better when you're going with the trend. Sometimes you're going to work out counter trend, like we saw on gold right here. But if you want the best results, you definitely want to go with the trend, because you're going to probably have better runners, and you're going to have a better win rate in general when you go with the trend. So now, last day of the week was Thursday, because Friday was NFP, so I don't trade NFP. And by the way, I didn't take all these positions. I'm just doing an overall analysis of the previous week on how it went with liquidity graphs, so that you guys can potentially understand liquidity graphs and learn from these videos. So in this case, SPX, once again, we are bullish overall on SPX. So we had a consolidation phase over here on London, and then also in the beginning of New York session, you had some lows over here, equal lows from London session, right? 3 equal lows from London session, and then New York came all the way down here, took the liquidity from those lows. Like, let's say people that bought here, here, and here have the stop loss a little bit below this low. So let's say they had the stop loss right here, and then they got stopped out at that level right there, and then SPX completely reversed after that and closed the candle well above the previous low over here. So your entry will have been at the break of that candle right there, stop loss below the previous low right there, and then you aim for a 1-to-1. And yeah, the rest was history. It literally went up for the rest of the day. This literally gave you more than a 1-to-1. You could have aimed for like these equal highs that you guys can see over here. That is also liquidity sitting right there. So you could have aimed for that level right there, and that would have been your TP a little bit over a 1-to-1. So yeah, perfect day also on SPX on Thursday, and I believe that Nasdaq also had a liquidity graph setup on Thursday. So this is past the New York Stock Exchange Open. I don't trade Nasdaq at 9:30, and we can see that also Nasdaq is bullish in the higher time frames, and also on structure on the 5 minute. It is bullish, creating higher highs and higher lows. So you have a clear swing low right here that was taken out right here, also in confluence with the 200 EMA, right? So it got taken out right there. Your entry will have been at the break of the candle. Then you aim for that 1-to-1, all right? It didn't close below it. It closed above the previous low. So then it went up, gave you that break of the candle. Then you will have gotten into the position, and then Nasdaq came all the way back down, rejected the 200 once again, never hit your stop loss, and then reversed and went to the upside, hitting your TP after that. So beautiful, beautiful trade also on Thursday with Nasdaq. So yeah, last week was really, really, really good for liquidity graphs, guys. As you can see, every single day of the week except for Friday, which I didn't backtest. I don't trade NFP. We saw at least one liquidity graph, and this is very common in the market, as well as supply and demand. My main strategy is supply and demand, but liquidity graph is my secondary strategy whenever I don't see any supply and demand setups. All right, so make sure that you guys subscribe, hit the like button, make sure that you guys repeat this video if you didn't learn anything, because there is a lot of information that I have provided to you guys about liquidity graphs, so you can basically learn a lot from this video and these setups, and go and watch them in your charts as well, and back test them and see things that you like and how liquidity graphs happen in the market and everything, so that you guys can understand liquidity graphs better and potentially include it as one of your strategies for day trading. So with that being said, I'll see you guys in the next video. Thank you so much for watching, and peace.